Look, don't get me wrong. I sometimes get caught in boredom trading.
Yeah.
Where I'm sitting in the car waiting for the robot to turn green, and I'm there like, oh, okay, that looks nice, and let's
hold up.
And then I'm holding my phone whilst I'm driving to the next robot, and I'm like, oh, why the hell?
I've had that.
Why the hell did I do that?
The first rule in investment is don't lose. And the second rule in investment is don't forget the first rule.
The
And
Federal
that's
Open
what the rules
Market
are.
Committee's overarching focus right now is to bring inflation back down to our 2%.
You're offering us a chance to short this pile of
The
rocks.
most obnoxious group of money-hungry.
Indeed, the global economy is at a delicate moment.
Welcome back. Clawback.
Yes.
We have finally resurrected our baby.
Markets have not been kind. But I'm glad to be back. I'm glad to be back with Clawback.
Yeah.
Because even today, I was looking at something on YouTube to wrap up what happened last week in the markets, and there was nothing.
Yes.
So I was like, there's still a need for Clawback 2 years later.
Yeah, and I think we're a lot wiser.
Yes.
We're a lot wiser compared to how we were 2 years ago. A lot has happened in the markets since our previous recording.
I've been catching little bits of this rally that we've been having with the Nasdaq since we last spoke. So last time we spoke, Nasdaq was at 18,400. That was March 2024.
Last time we spoke, we were looking at Nasdaq.
Yes.
Oil. Gold,
your favorite.
Which, yeah. We yeah. Toxic relationship.
Toxic relationship with gold.
But I mean, those three instruments are the movers at the moment. They're hot topics.
They are hot topics.
Okay, well, let's replace Nasdaq with the dollar index.
Dollar index, yeah.
Yeah. But we spoke about COVID and how the market was influenced by COVID and how oil, we gave levels.
We did give levels.
Yeah. And I think we've hit those levels.
Blew through levels like crazy. I remember you were in a gold position in March 2024 on the day of shooting, and you were long gold and it was in a range, and you were like, is it going to blow through this? And I was like, yeah, probably. And then it kind of doubled since then. It was at 2,500.
Yep.
And now it's at 4,000 something.
700 now.
4,700.
I think 4.7.
Wow.
4.8. But
insane.
And I'll get to it. My experience on
2,195 was the
the
spot
level?
gold price, and silver was at 25.60, and now it's at 71, and that's considered like low because it was at 121 like 2 weeks ago.
And this is also the reason why we've resurrected the show, to go back and say, you know what, we predicted
are geniuses.
We predicted these levels, and bang on the money.
Bang on the money. We have the oracles, the clawback.
Yeah.
This is what you need. Macro geniuses in your pocket. So subscribe right now so that you can get the scoop on what's going to happen next.
Yeah. And something we also spoke about was trader psychology. And I think that ties in with what we're going to do on the season of clawback. Because I'm not going to lie, it is a new season.
It's a new season of clawback, definitely.
We're doing something different to what we came into, but with the same mission.
Yes.
But we're making it more professional, more digestible to the mature trader that isn't looking to buy, sell.
Yes, career trader, trade with your rules, trade with science, not feeling and emotion and FOMO. So that is our vision and mission statement: to educate, to inspire, and to uplift.
Yeah, exactly that. So last time we were on here, I was also full on Nasdaq. Bullish. Nasdaq. And Nasdaq's now most US indices have just rallied. Gold rallied. But let's talk about what's been moving the markets lately.
Yes.
We have the US-Iran war ongoing. And this is something that we spoke about on the previous podcast. We spoke about World War III and what could potentially, or was it the previous podcast? It was one of our discussions.
One of the discussions was World War III. We were looking at the catalyst for World War III at that point was Ukraine, Russia. We thought that was going to be the thing.
Yes.
That was going to be World War III. Now, who predicted US, Israel versus Iran? That's crazy.
Yeah. We looked at Russia, Ukraine being the catalyst, but also China invading Taiwan.
Yes, China invading Taiwan.
Japan getting into the mix.
Yeah. Those were the days.
Oh, India, Pakistan.
But India, Pakistan's been going on for like 10 decades.
Yeah, okay. We also looked at, we did not think for a minute. Oh, we were looking at also, we were speaking about Israel, Palestine.
Israel, Palestine at that point.
And
let it be noted.
Yeah, and
before it was cool.
And now Iran, USA. So a big shift. I mean, we know, at the time, 2 years ago, Trump was not in power.
Yes, it was Biden at that point.
Yes.
Bidenomics.
And we spoke about polls.
Yes.
Yeah.
Yes, because they were campaigning at that point.
So now I'm going to call Trump a catalyst.
He's definitely a catalyst.
He has, which this is nothing new. He's someone that, or the market has the dynamic of how people make decisions on executing now is not technically driven or fundamentally driven. They're just going to Twitter.
When was the last time technical analysis proved to be effective at all in the last 2 years? It's been basically, it's all fundamental driven at the moment and news and Trump driven.
Yes.
It's absolutely crazy. And also, I think he's gotten far more brazen in everything he does because it's his second term. He doesn't have to run again. He doesn't have to play it safe. So he's gone full tilt with everything he's been doing.
Yep.
So the ego of a man has put a torch to everything financially.
Yeah, I agree. But it's good for us traders.
It is good for the traders.
It is.
Big moves. If you catch big moves, you can earn a lot of money.
You know what the new saying I've come across? When the market's bullish, it's a staircase. But when it's bearish, it's a lift going down.
It's a lift going down. It's
and
fast.
We've seen a lot of these over the last few months now with the volatility on this due to this Iran USA war going on. It's a lift down.
It has been a lift down, yeah.
Trump says something and
we in peace talks.
Let's go one step back.
Let's go one step back, yes.
The gold safe haven. Let's talk
about gold.
The gold safe haven and how everyone put in long positions Friday afternoon. Trump came on television. He did a public announcement. We are now going to war in Iran.
Yo.
Because remember, everyone said, okay, it was Friday. Everyone said, tensions are rising in the Middle East. Let's long gold. Something's about to happen.
Oh, you're talking about like
the initial start.
Oh, sorry.
The initial start.
Yes. Everybody long gold. It's going to be great because it's a safe haven.
Yes.
And then what happened is gold took a massive, massive plunge.
Yep.
Yeah.
Yep.
And I have a theory on why that happened. So gold, it's the safe haven, that's for sure. But it's also where people draw liquidity when people are in liquidity issues. That's where they draw it from first. So I think a lot of people or a lot of institutionalized investors were caught in bullish indices positions, bullish AI and chips manufacturing stocks. And they needed liquidity from somewhere, so they pulled it out of gold to keep their positions on tech and stocks alive.
Yeah.
So it is still a safe haven. It also happens to be a liquidity safe. Safe? That's my opinion.
I think it was a liquidity grab, to be honest with you.
Yeah.
I mean, you had all these long traders and
Like you.
yeah, I was long. I'm not gonna lie. I was very bullish. Obviously, risk managed bullish, but
Yeah, always.
I was bullish, and I held a position that, gold dropped in 3 weeks ago. I think it was gold did a massive dive as well. But when the war initially started, I was long, and I got caught in this massive short, or a whole 1.5 month short, because gold has been bullish. I think now it's only recovering, but
so your short position's looking better.
No. I was long, so my long. Was up
your
there.
long position was
like at 500-600, I think it was.
Ooh,
yeah,
hectic.
So and then it went all the way down to like 400-600.
Yeah, 400-600. Now.
Actually, even
I
lower.
understand the theory behind that, because with everyone being shaky about the petrodollar, because that was another big risk to the dollar, was people were going to start trading oil in yen or yuan instead of dollars, which is going to be a massive knock to the dollar and the massive knock to. So people pulled out of dollar and went to gold for it's like a koala. Gold is the koala position. When you're not a bull or a bear, you're a koala and you sit on the side.
Yes.
It's typically where gold fits for me. So I understand the psychology. It made sense to me.
Yep. Everyone was long gold.
But
everyone was long gold. And then the news update was, sorry, not the news update. Word on the street was,
the tape.
The dollar was appreciating in value, and investors just felt that putting their cash into bonds and the dollar index, and obviously the stock market, the US stock market, was a better play. And that's exactly what happened. You had a lot of profit taking happening on gold.
Yeah.
And it just caused a sell-off, because now it spooked
domino
the markets.
effect. Yeah,
spooked the markets. Everyone's selling. And before you know it, you ground floor, please.
Yeah, to Lorenzo's detriment, unfortunately. But that's the important thing about Clawback and this podcast, is that we are going to showcase our losses almost more than our wins, because those are often more important. You will have 10 solid wins that are 10% of your account, 10%. Then you'll have one massive loss, which will wipe out 100% of your account. So it's why it's important to realize in trading that it only takes one bad trade to kill so many gains. So every single trade needs to be treated with respect and risk management, and your your psychology needs to be, your rules need to be followed.
Oh yeah, of course. And I mean, this is why we're here. This is why we're doing it. So yeah, initial, just,
I want to call out that nobody's always winning. If you see people with screenshots of blue profits, it's most likely some grifting happening. Grifting is everywhere.
True. Oil.
Let's talk about oil.
Yeah. Look, I'll be honest. I haven't.
You've been trading oil. What's your macro view on oil? Macro, top line.
Well,
where are we going?
Something that I also wanted to discuss on the show today is the upcoming recession, or the looming recession. You have a domino effect over here. You have a war that has broken out, and oil tankers cannot move out of that region.
And it costs oil, doesn't it? Doesn't it use up oil? It uses up more oil to go around Cape of Good Hope.
Well, they can't even get oil out of the Qatar.
Because of the Red
Saudi,
Sea,
that region.
Yes.
So you have a whole lot of
standing
demand.
Ships. Yeah.
Well, you have a lot of global demand, and everything's parked. So now it's taken, there's been some passageway to a few oil tankers and stuff to make way to certain privileged countries. But I'll speak from a South African point of view.
Yes.
You have petrol and diesel going up.
Yes.
Okay? Now, how does that affect our economy? Inflation, because
Logistics,
food then goes up, cost of living through the roof, but salaries still stay the same.
salary stays the same. So a fun side effect about that is inflation maybe gets a little cooler because discretionary spending goes down. So maybe a little bit of, because people don't have as much money, but everything costs more. Oh,
Powell,
yes.
going back to the Powell thing.
Oh, Powell.
If he cuts rates, then that gives
yes,
that gives people
extra cash
a
from the bonds and
bit of a break.
Yeah.
But
when
the
is the
market's
next
still waiting for Powell to do some rate
to
cutting.
do some rate cutting?
I mean, Trump's been shouting from the rooftops, cut the rates, cut the rates, cut the rates.
What do you think he's going to do, Powell? When is the next rate cut?
Well, that's the thing with inflation and rate cutting is if you do it too fast, inflation goes up.
Inflation goes hot.
If you do it too slow, then you have
a recession.
Yeah.
Fast track a recession. Jobs.
Yeah.
Job market is
Hey, did you see jobs last month came out NFP negative 94,000?
Yeah, negative for the first time in a couple months or a couple.
So December there was also a
negative read on NFP.
Yeah,
goes to show that what they did in 2024 with rate hikes was too fast and too high. The rate hikes, because I remember people's profitability or people's liquidity was wiped out by those rate hikes.
Yeah,
you were paying like 6,000 rand a month extra on your house payment. Suddenly, it was like, where do you get this money from?
Yeah. So, I mean, oil.
Back to oil.
Back to oil.
Yes.
Most consumers don't understand how this war is really affecting them.
True.
And how they can actually even profit from these sort of events
exactly
that's occurring in the Middle East.
Nobody knows how to profit from these times. These are profitable times. It might seem dark, but this is when market makers are made.
Like most I see a lot of these, like the Elon Musks of the world and Tony Robbins of the world. They come out and say, now's the best time to
make money. Generational wealth.
This is the easiest time to make money. This is it's available. It's online. You have to be really either lazy.
Yeah.
You have to be either really, really lazy.
Lazy is scared as well.
Yeah.
Despondent.
Scared money makes no money.
Scared money makes no money.
Yeah. So one of those two things. You're either really scared and you're conservative, or you're really lazy and you can't go out there and actually make it for yourself.
True.
So
it's on you.
It's the easiest time. And a lot of consumers and a lot of 9-to-5 workers, they don't understand that they can actually profit from the events that is going on in the Middle East. And
yes, and you don't have to be chasing anything. You just have to position yourself strategically and do a couple of right things to exponentially improve your position your lifestyle.
It's basics. For example, oil.
Yes.
Oil. There's supply and demand.
Yeah.
There's a short supply with a high demand.
High demand.
Obviously, price is going to go up. You can long
oil.
The oil. If demand goes up, if supply goes up now, demand drops, you're shorting.
You're shorting. Yeah, exactly.
It's goes back to the basics of or the fundamentals.
Sometimes
of everything.
overcomplicating trading causes your indecision fatigue or decision fatigue.
Yes.
Because then you just end up not doing it. Over-analysis paralysis. That's the word I was looking for. Over-analysis paralysis.
Yes.
When you're looking at the moving average, then you're also looking at fundamentals, and you're also looking at Fibonacci, and you're also looking at sometimes take all of that stuff away, all of the crayon drawings on your chart, look at a thing and say, where is it now? Is it stretched? Or look at the fundamentals like demand, like high demand, low supply, long oil.
Yeah.
Or for example, look at the metals. We had a major pullback on silver and gold. I personally am very bullish on the metals because it's something that is needed for production. Something like silver and copper and zinc. We also have a shortage on that because you can't transport the metals. You're going to have high demand as well. Low supply, high demand. I think I'm very bullish on silver for the rest of the year. I'm very bullish on gold for the rest of the year. But
well, sorry, going back to gold.
Yeah.
I think this correction was needed.
It was needed.
It was needed.
Some profit taking. People close their positions, things go down.
It was needed, and it sets us up for a to the moon sort of scenario.
To the moon.
To maybe, I think a next target maybe, and don't hold me to this, but
don't hold us to any of this.
I think maybe we're looking at maybe 8,000, 9,000. I'm thinking maybe even further.
My target was 6,500 or so.
Okay.
On gold.
Yep.
And 180 on silver.
Yep. So
on a long-term look, let's look at I'm gonna make a quick prediction now. 6,300 on gold and 180 on silver by Labor Day. So that's September.
Okay.
That's my outlook.
Price? Gold?
Gold 6,300, yeah.
No, I reckon it'll go further.
Further. Okay. So what's your prediction on gold?
Because it hit 6.4 just the other day. Or 6.
Oh, maybe I'm looking at the wrong spot price.
Like a month ago, it hit 6.8, I think. No.
8.3 on gold is my actual prediction.
8.3.
Sorry.
Okay.
I was looking at the wrong spot price.
Yeah.
Sorry.
So 8,300.
8,300 on gold.
Mateen's
180 on silver.
Okay.
My prediction. Locked in. I might take a silver position today, like a long-term runner kind of silver position at 71 now, and just let it be. No profit, no take.
Will this be on your preferred broker, BOF?
This is how I'm gonna trade. This is I've got my BOF asset management trading account. I did the VIP spread.
Yep. Well, they are our sponsors for this.
They are sponsors for this.
Show.
Yes.
We do need to get like a BOF something.
We will. We'll have it there. But I'm logging into my account, opening the position, and I know that they are fully compliant and regulated. So they're not going to be trading against my positions. They're not going to be cutting and running with my portfolio, because that happens.
Yeah.
Brokerages just go liquid, and then all of your positions just kind of disappear. So I can take a nice long-term position with BOF because I trust them. So that's what I'm going to do this afternoon when market opens in
a few. Oh shit!
It opens in
I left
30
so
seconds.
much at home. I left my coat at home. I left my watch at home. I left my ring at home.
You can't trade without a coat, a ring, and a watch. Yeah, that's true.
Actually, is it wise to have a watch
when you're trading?
Yeah.
Yes, because when you're trading, sometimes time just slips away.
You know what? I'm always looking, and this is why I think it's not a good thing.
Yes.
Because I'm always monitoring when that hour is going to close.
Oh.
So I'm always like, okay, nothing will happen in the last 5 minutes. Nothing will happen in the last 5 minutes of the hour candle. And then what do you know?
Something big. It's fun because it's all fundamental driven. So what you need to have when you're trading is you have what I do is I have financial juice open all the time, because then a big red thingy comes up saying some oil reserve was
financial juice.
Financial juice.
Yes, you did speak about it the last time.
It's just a nice way to just keep getting updates about market moving events. So whenever Putin in 2024, when Putin was speaking, then something would come up.
Yes.
Putin is speaking right now. Let's see what happens. Now it's US bombed Iran oil reserves. Let's see what happens. Or
we should maybe introduce this to our clients.
Yes, definitely.
Or, well, to our followers. Like, we were thinking also maybe a WhatsApp group where we're putting out these sort of news events and alerts.
News events, alerts, what we're doing, trading
Be on the
wise.
lookout for X, Y, and Z. Do this, not do this, do
Not
that,
do
but
this,
be
do
aware
that.
of this and that.
Be aware. Yeah. Like our outlook on metals and what we think short-term, long-term view on oil, metals. Oil, my long-term view is that it's going down big time. Obviously, short-term, it's going to be climbing a little bit higher, maybe to all-time highs again, like the levels we saw in 2024.
Well, I think as soon as there's a ceasefire in the Middle East, I think oil's going to...
Back to 80.
Yeah. Ground floor, please.
Yay. Then short oil.
Yeah.
Definitely, for sure. So you don't wear a watch when you trade because...
No, well, I do. Well,
your psychology of the candles.
I do, but I'm just saying I think I should not, because I personally think I should just let the trade run.
Yes.
Just forget about it. If you've managed your risk, forget about it, walk away, go do something, go be one with planet Earth, and, get on with it.
When trading, be like water. Don't resist. Don't hold on to your preconceived, because you must be able to change your, if you don't want to over commit to a trade that you thought was going to go well.
Yes.
Like, it's going to go well. I know it's supposed to go well. Why isn't it going well?
Well, that was me and gold.
Yeah. And that was me and DAX at one point. But be like water. Take a loss sometimes. Move on. Take a breather. Come back. Reassess. Go for a drive. Talk to your parrot. We both have parrots.
Yeah.
Which is interesting. Talk to your parrot. Then come back, look at the market, fresh eyes, look at a new position. But don't revenge trade. That's the biggest thing. No, revenge trading will get you caught.
So gold, it is what it is. It happened to us. Oil, we somewhat know what's going to happen to oil. Should we get a ceasefire, it could possibly even be dragged out to maybe
the downfall,
the second half of the year.
Yeah.
This war, because and the reason why I say this is because you have troops, US troops, that are ready to move on the ground. I mean, why would they? Hey, also something else that I came across.
Yes.
This war is not cheap at all for the US taxpayer.
I also saw that 29 billion.
Yes.
That they've spent so far.
Yes. This is actually one of the most expensive wars in the history of mankind.
Definitely, for sure.
I think it's like in the top 5, if I'm not mistaken.
Oh, it's hectic.
It's one expensive war.
I have a very stupid question. War and military spending, does that have an effect on inflation? Is that inflationary spending? Because that money goes to the private firms, Lockheed Martins, and then they inject it into the economy.
If you're going to go down the rabbit hole.
Yeah.
Okay. One can also argue that where's the states, or where's America coming up with this sort of money?
Yes.
Are they printing it? And with printing, inflation.
Oh, we've cracked it.
Well, I mean, conspiracies. But all I'm saying, it's not cheap for the US taxpayer.
It's not cheap for the US taxpayer. Their every day isn't being improved by this money at all.
No.
Yeah. It's a rock in a hard place.
And what does that mean for the dollar as well? Do consumers wake up and ask themselves, if my money
that's in my bank account, those numbers on the screen,
I think also another conspiracy, New World Order.
Yeah.
These things affect the markets.
Yeah.
Will the US stock market collapse? Will we see another .com bubble? Will
AI
we see
bubble.
a 9/11
Black Swan event?
Yeah. Housing crisis.
Iran.
Speaking of housing crisis,
Yes.
have you seen what's going on with the Dubai market, housing market?
No.
I think
not
there's
really.
there's an index.
It's an index for
There's a
housing
housing
prices.
index, yeah.
Okay. What's it
And
called?
that has lost close to 70%, 60 or 70%.
So it's a good time to buy
A good
property
time to buy.
in Dubai.
Unless Dubai gets bombed the hell out of the place. But,
Even better time to buy.
but I mean, these things are opportunities for people.
It's true. It's true.
They see crisis and everyone
yes.
becomes conservatives overnight.
It's about having that capital and that liquidity on the sidelines for when the opportunity strikes. And unfortunately, I don't know if because people are living paycheck to paycheck
Yes.
with your 9-to-5 job. So you need something that can give you a bit of a, like, fun coupons, as Wolf of Wall Street mentioned. So a stash of cash that's on the sidelines for buying property and for buying assets that are dirt cheap now. For example, I'm sure sports cars and hypercars are going to take a massive dive because putting fuel in them is going to, and also people are looking at liquidity. So if you have a portfolio, it's more important than your Ferrari. So you're going to want to sell that thing or your G-Wagon, and you can probably pick up that car for much cheaper than you could have like 3 months ago. So it's those kind of opportunities that trading does allow you to build up that kind of nest egg so that you can then look at real world opportunities as well.
Yeah. So there's a lot has happened in the last 6 months. A lot has happened in the last 6 months, but
it's fun.
It's given or it's presented a lot of opportunity.
It definitely has. Have you found that trading in the last 6 months has been unlike anything you've compare trading in the last 6 months to trading in 2021 or even 2018 when nothing moved really? It was just kind of volume was so
And
low.
if you have a look at gold,
Yes.
the candles are a lot smaller
Yes.
the further back you go.
Tiny candles.
Yes, compared to these massive moves. But that's liquidity.
Yes.
It means that there's more
And
liquidity
volume,
in
yes.
the market or in these specific instruments that we're looking at, which is good.
It is good.
The moves are bigger.
So your lot sizing can be smaller with bigger profits, which is nice.
Yeah.
This is more accessible for more
Yes.
people because before you had to have you have to open big positions, have a lot of money to make a lot of money.
Yes.
Now you can make a lot of money by being very strategic. Small positions, micro lots.
Yeah. Yeah, the market's changed a lot, eh?
Last 6 months, you were saying, last 6 months trading, very different.
Yeah.
Has it been more fun for you?
I think
Adrenaline.
my mindset has definitely changed a lot. I mean, both of us, our mindsets have shifted to what we thought trading was and what it actually is. I've become more mature with the decisions. Look, don't get me wrong. I sometimes get caught in boredom trading.
Yeah.
Where I'm sitting in the car waiting for the robot to turn green, and I'm there like, oh, okay, that looks nice, and let's
hold up.
And then I'm holding my phone whilst I'm driving to the next robot, and I'm like, oh, why the hell?
I've had that.
Why the hell did I do that?
It's happened to me all the time where I'm also driving and I'm like, oh, why am I driving at this perfect opportunity to trade? So much is happening. People are making money without me. Let me open a position while I'm driving.
Yeah.
That's another level. Because I was talking to someone about our attention span is brain rotted to the point where you even scrolling reels while driving.
Yep.
Now you're trading while driving as well. So watch out for license plate LM4563GP. That's Lorenzo, and he's busy nursing a position on the road. No, that's not your actual.
Even when I'm watching TV,
you're trading.
No, I sometimes get caught in boredom trading.
Yeah. There's nothing else like it. The adrenaline on trading. There's no movie. There's no paddle game that's as addictive. So
and tell me, how annoying or frustrating, or not annoying or frustrating, but like
when you think if you had a time machine and you could go back 15 minutes before you open that position,
when your missus is talking to you and there's a trade on
autopilot, I'll say yes or no. I'll just be like,
and she's going on, and I'm like, just babe, please,
just
1 second, just 1 second. 1 second turns into an whole hour.
Don't, kitten. We're trying to maintain a position here. We've got a mortgage on oil right now. Can you just give me? Daddy's trading. I can buy you a Birkin if this goes well. But it's happened a lot of times, and I feel very guilty, and I feel very like a scumbag. You know the scumbag dad that ignores the daughter?
Yes.
And I feel like
yes.
That's why you have to lock yourself in a specific area for trading. Mm-hmm. You have to be in a very focused
or
mindset.
Even like execute the trade and leave it.
That's been much better for me.
Put in your TP, put in your stop loss, and just forget about it.
Yeah, that's generally when I do better is when I follow my rules. See, before the trade, before opening the trade is where the work is. Yeah. That's where the time should go, not after watching it the whole time and looking at the tape, looking at this, then looking at Twitter and seeing somebody that tweeted like some random nonsense like, oh, this is going to tank right now. Get out. Right. There's fear mongering on Twitter.
Yeah.
And then you get into a like neurotic spiral where you close the position preemptively and then it goes your way. Then you open at a worse position. Then it pulls back a little and then you close at a loss and then it goes your way again. And then you open at a worse position. So you keep losing.
Yep. Yeah.
So yeah, being distracted, boredom trading, and watching the market, watching your position like a crack addict.
Well, Mateen, this was a good episode.
This was a good episode.
I think we went through a lot.
Covered quite a lot.
I do want to see, I think, let's touch on it again. The outcomes of this war. What happened? How did it close? How did the markets react to it? And yeah, so we'll park this one for now.
Very nice.
And then
very nice.
We'll pick it up again once we have a ceasefire. But any updates that happen along the way, we shall drop it in our Telegram, WhatsApp group. We're still deciding. We also please we'll slot our link to our group. Please join. Be informed. What's that? Do you remember that?
Like news anchor sign off.
Yeah. I don't know if it was. Do you remember? I think it was on Tube.
Tube. Oh, Tube.
B squared or something.
Hip to be squared.
Hip to be squared.
Hip to be squared.
Anyways.
Stay well, stay cool, clawback.
Clawback.